Today, we will be testing the reverse moving average convergence divergence indicator.
But before we do, if you have not watched the first video on the channel and all the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. There is also a link down below to sign up for Tradingview. You can save a little bit of money if you use the link below to sign up for your account. You can also find a link below to join us on Discord. Lastly, if you would like a list of all the indicators we have tested along with their win rates, but you aren't interested in watching all the videos on the channel, you can sign up for our $9 Patreon, and you will receive the complete list of indicators. We also would like to introduce our Patreon exclusive Discord channel. As a $9 Patreon, you will be invited to join an exclusive Discord channel where we will give you a list of winning indicators and links for the MT platform, give you winning strategies, post trade ideas, give advanced advice, and much more. So click the link below to join our Patreon.
Alright, as I said, today we will be testing the reverse moving average convergence divergence indicator. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 51 different strategies, with 13 of them being profitable. We've also tested a total of 610 indicators, with 251 of them being winners. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. So go back and watch those videos and see what you can get out of those winning indicators. And keep in mind that we test most of these strategies and indicators on the Forex market, but they can be applied to just about any market universally. Alright, so today's indicator is the reverse moving average convergence divergence indicator. We tested this one on the last video, and in that testing, what we looked for was the price action break or cross of the blue line. So when the blue line crossed down below price action, we would go long. When the blue line crossed up above price action, we would go short. In this instance, what we are going to do is we are going to use the blue line as an overall trend direction, like the larger trend direction of the market. And what we are looking for is the color changing line here, the smaller oscillating line. Might actually go in and turn this up a little bit, or I think what we'll do is maybe just go ahead and turn on bar coloration. Sometimes it's easier to do that. Again, I know that some of you aren't very fond of the bar coloration, as I am not as well, but that's all right. We'll go ahead and leave it on like that. So what we're looking for is the color shift. And so for instance, when we get the cross of the blue line to the downside, then we are looking for the color shift line here to be in the green position or change to the green position, and we will go long. So when it first makes that break to the downside, the blue line, then if the color shift line is in the green, then that is a valid long entry then. And then we would look for any other time that it switches to green, we would then go long. And same in reverse, when we get that break to the upside, price action breaks down below. If the color shift line is in the red or maroon color, then we would go short, and then we would look for any time that it switches to maroon or red, and then we would go short again. So that's what we're looking for. Let's go ahead and try that and see what we can get out of this. All right, so the first signal that we get is a short signal. We get that cross to the upside of the blue line there, and we get, or we can see that the color shift line there is in the red position or maroon position. And so it officially crosses up right here on this candle. Well, at the close of this candle, but on this candle here. Let's see. So on the close of that candle there, and we don't get a very good push to the downside before we get that immediate push back to the upside there, and that would have stopped us out on that one. Let's go ahead and continue on. All right, so the next signal that we pick up is a long. You can see right here, we get that push to the downside or cross to the downside with the blue line. And we can see that the color shift line is also in the green position. We get a little bit of heat down here to our stop. Got really close to it there, but not quite enough to stop us out before it then makes a nice push to the upside, getting us to our take profit. So what I'm going to do here is go ahead and fast forward through the testing that way things don't get too long, and we will pick this up when we are at the end of the year. All right, so that's going to put us at the end right there. Before we take a look at what this was able to achieve, now would be a good time to say that if you are interested in excelling your trading knowledge, I highly recommend that you join our Patreon only channel on our Discord server. You can find a link to our Patreon down below, as well as a link to our Discord. Once you sign up as a patron, it'll give you access to the Patreon only channel, where we post some really great advanced information about trading strategies, trading indicators, and trading philosophy in general. And as I mentioned in the beginning of the video, you'll get access to the full list of indicators that we have tested. That comes in an Excel version and a PDF version, and you will get that full list of indicators showing exactly which indicators were winners, which ones were losers, as well as their win rates. And you'll get access to an Excel sheet of all the strategies that we have tested that shows exactly which strategies were winners, which ones were losers, as well as their win rates, and links to go back and review those individual strategies. And so there is a lot of benefits to becoming a patron of the channel, and it doesn't cost hardly anything at all. I highly recommend it. All right, so let's go ahead and take a look at our indicator here. So that obviously gave us a significant amount more of trades for the 1 year's time than the last video that we did on it. Let's go ahead and count these out though and see what we get. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, and 23, excuse me. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. 13 winning trades. And so that is barely going to miss that 60% criteria that we are looking for. And so, yeah, this is interesting enough. And so, obviously, having less trades in 1 year's time isn't always best, but in some cases it can be best if those trades or those signals are giving you signals at the appropriate times and allowing you to ride out trends for an extended period of time. In this particular case, we kind of assumed that we would enter, hit, take profit, close the trade, enter, hit, take profit, close the trade, and so on. And we've done this with a few other indicators before, just to kind of see, overall what happens. And so even though we got more trades within the 1 year's time, it lowered the win rate quite significantly, to the point to where it really wouldn't be necessarily worth it to even use it this way with the stop and take profit that we were using. And so yeah, I mean, what can we say? The first way that we used it was definitely a lot better. Less trades, but a lot better. Hopefully it holds up during the next step of the process, when we put it through a little bit more thorough testing with more trades. But for now, nonetheless, so this one is, I guess, part 2 of this is going to go on the no list. The original will stay on the yes list, but we'll move on to the next indicator from here.